The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis, from the offices of Duke & Duke in South Philly, where we are at 72 degrees. Can you believe that? In the middle of December. I don't think in history, since they've been keeping records, which is one of the oldest cities in the United States, they've never had a December 14th at 72 degrees. And it's foggy here today. It looks like London. It was 71 yesterday. Just unbelievable. So it looks like, what's his name? Oh, you guys, unfortunately, post things in the Tiger Den that are kind of funny, but it's about the same temperature as Florida, so who knows? We'll see what happens, what's going on. Okay, now we will go into the markets here. We had a huge rally last night. As you can see from the first chart that I posted, we rallied 20 S&P points up to the 382 retracement, and then we came down and made a new low, and that's what we're supposed to be doing today, folks. We should be making a low today, and this is where we would be looking for a pretty good rally to happen, usually 3 to 5 days after a move like this. I'm going to go through a sequence of the patterns that I'm looking at here, whether they hold up or not, but they're set up to certainly, do what they're supposed to be doing. The first one we're going to look at, of course, is the New York Stock Exchange Index. And as you can see here, that we were just about spot on at a 61% retracement, a perfect Gartley pattern Friday. This is also one of Norm Winsky's from Astro Trends key dates. Remember, the last one he had was December the 7th. That's when the market started down last week. And now there's an Astro date, a pretty good one too, as a matter of fact, here on Monday. So we'll see. Now we've had a pretty good rally of 20 points. Now, if we close badly today, folks, all bets are off, because then we're going to start melting down. We are going to melt down. It's just a question of whether it's going to be now, or whether it's going to be in 3 to 5 or 2 days from now or a week from now, because whenever we have this rally, if we do get it, that's the one we want to be watching, because that'll be the third lower top, and we would like to, we certainly want to be jumping on that from the short side, I would think, because the market is really got some really negative things going for it in the market. Now I wanted to just to show you the New York Stock Exchange on a little bit a smaller time frame, going into a 60-minute. So we would be able to take a look at that. You'll be able to see it here in just 1 second, as soon as I hit the old toggle here. And you'll see that we were within a heartbeat of the exact 1.618 expansion as we came into the market on, as we finished the market on Friday. But we hit the 61% retracement. So we were very, very close to doing that. Now, one other market that we've been following pretty closely has been the Hang Seng Index, which is out of Hong Kong. And last week we had a Gartley pattern in that forming down at the 21,000 level. And on the open last night, about 10 minutes after the opening, the Hang Seng got to 21,010. And is now rallied to 21,383. So it's rallied just about 360 points off of that bottom. That's the importance of this date today, because if we close really badly, that means all these numbers that we're looking at are going to be failing, and that means we would be we would be heading down also. The German DAX had a really wild swing today. It opened higher, rallied up to be up about 150, went all the way down and took out the lows of yesterday, and then has held so far. But they're having some really big swings over there across the pond, over in Germany. So there's another thing that we want to watch. Now, the VIX index, interestingly enough, last Friday went up and made a beautiful 786 retracement of the high that we made back on September. Well, actually, it was the low of September 28th. In other words, that was that big super full moon that we had where the market bottomed. And we went up, and now we've made a 786 retracement of that. So this is the spot here. We're going to be real interesting today, because if we can turn this market around today, folks, we got a chance for a pretty substantial rally, only because it's oversold over a 7 or 8 day period. That's all you'll be looking at, in my opinion, is a 3 to 5 day rally, because the overall bearishness of this market is, boy, it just can't be denied. If you look at the breadth of the market, it's just absolutely horrible. All of these things are rolling over, and it's a really interesting time, to be watching these things. So it's very important that we keep an eye on that. I wanted to bring the DAX chart up for you, so you'd be able to see that, because we came down and just about hit a perfect 61% retracement in the German DAX this morning too. So there's just a really lot of numbers coming together, not just here in the United States, but here in in London we have it, and then also we have the same thing happening in Hong Kong. China, I didn't check. It was down a little, but nothing to be sneezed at. And unfortunately, that market is pretty much off the charts as far as being able to understand what they're doing over there. So we'll keep that in mind as we walk through this. Now, okay, now I want to switch gears here for just a little bit, because I think we're at a really critical level here in this crude oil complex. I know the whole world. I don't know. I hope maybe I've lost connection here. I don't know if I have or not. Testing 1 2 3. Testing 1 2 3. Uh-oh, shut the front door and raise the rent. Uh-oh, no good. Oh, okay, good. I'm okay. The other person's not okay. Okay, thank you for checking in with me. I appreciate it. Okay, I think we're getting really close to this bottom in the crude oil market, folks. The reason is that they really bombarded it today, and they should, because you had heating oil down about 7 cents. But heating oil is very interesting now, because I want to put this chart up to show you the what we had today in the heating oil, because it's very interesting. We made a low of 112.56. We went down and matched the low from 2009. And heating oil was down 30 cents last week. We're down about 7 cents today. So we're very, very close to a potential double bottom in this. And also the same thing is true with the crude oil. The crude also made new lows below the low of back in 2009. So all of that is telling us that we're very, very close. And we have that seasonal that we're dealing with that looks really, really interesting too. Now, if we take a look at the gasoline futures as compared to the West Texas crude, you'll see that the gasoline futures, are much stronger. And today, when oil was making a new high, all we were doing in gasoline was making a 78% retracement down at that 122 level. And gasoline has since jumped a nickel a gallon since it hit that spot. So I think we're getting close. I don't know if this is it or not, but we're very, very close to seeing something, really important happen in this oil market. And we could rally $15 a barrel, and it's still bearish. That's really that's the main thing. The main thing is what you're looking at. So you're right. So they're talking about in the den about the mainstream news. They are really pounding the negativity in the crude oil. And it's really hard to be bullish on heating oil or crude oil or gas and natural gas when you've got 72 degrees on the east coast of the United States on December the 14th. We've never had that before. So this could be the thing that pushes it to zero. But I'm a buyer at zero. I'll buy it at zero and use a time stop is what I'll do. But there's a lot of bearishness across the board on the oil, and if we do get a rally, it'll be a short covering rally, and it'll probably be something that'll just scare the bejeebies off of everybody, but that's what it'll be. So we'll see what's going on. Now, the Federal Reserve is meeting on the Tuesday, I believe, tomorrow, about the interest rates and whether they do anything or not. My guess is there's supposed to be an 80% probability that they are going to raise rates. I don't think it's going to make any difference to what the market does or not. That's just my opinion. Looking at these charts, they've jumped around. The whole world's expecting it, and usually when that happens, not really too much happens. Okay, back to the markets. I wanted to show you the IWM, which is the small cap. That's the one that has got the the January effect latched to its seat. So if you're interested in the January effect and you believe that stocks are going to rally into early January, where the small caps will gain on the large caps, this is the place where you can buy it, folks, because we closed right at the 61% retracement in IWM on Friday, and as long as we don't close sharply below that, I think we've got a chance here for this thing to have a rally of a few days. We've been down 10 days, so that's enough to give us a little bit of a rally because we're very, very oversold in this. So this is what we're watching here in the IWM. Now, I realize that I'm not putting any fancy oscillators or things like that on the charts. I just don't have any luck with those. I basically look at the patterns and the ratios and to see that they have support and resistance to come at those times. But frankly, you just have to wait and see if they're going to hold or not. And that's going to be the real key today, is if we have a chance to rally off of these levels that we've hit so far overnight in the pre-market. And the pre-market had pretty good volatility today too, so we're okay, with that. The yen dollar is, really started to move also, which is expected. And I think we're going to be heading lower in that also. We've talked about that several times. We're getting very, very close. Excuse me one second. I think we've actually reached there this morning. I haven't checked the price up to date here on the dollar yen. But as you can see, wow, we made that big ABCD pattern up there at the 124 level, 123.70, and now we're coming down into the 120, 119 level in the yen, and that's another sign that this should be a spot where stocks should hold, because this thing has a very high correlation to what happens with the market. But that's my opinion, so we'll see if that's going to be the case. If you have any questions, it's 877-927-6648, and I'll be happy to answer them for you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the Dow Jones Transportation Index. If we look at what's happened since the end of 2014 to where we are right now, we bottomed on August the 24th, and then we rallied up over the next 3 months up to a 382 retracement of the all-time high and a 50% retracement of the high from March 19th, which was one of those key dates that we were looking at also. And as you can see here, that we've already broken down below the 786 retracement of this, so we are incredibly oversold. And whether this is going to hold or not, we'll have to wait and see. But I don't expect it to hold more than a few days, maybe a 3-day rally, possibly a 5-day rally. But and if there is a rally, I'm not sure that there is or not. But I still think we're going a lot lower, folks, because this is an ABCD setup that takes the Dow Jones Transportation, down to the 6,600 level, and we're at 7524 level right now. So that's another 10%, another 15% down in the transportations is what it looks like from the charts, because there's a huge divergence between this and the Dow Jones Industrial Average, which is not unusual. That's part of the Dow theory. Now, if we take a look at the Dow Jones Utilities, you'll see that we are very, very close to making a a three-drive pattern in the Dow Jones Utilities here. If it's down just a little bit today, that would tell us that we're also going down to match that bottom from September, and then we'll see if it's going to have a rally also. Much of this is probably predicated on what the Federal Reserve is going to do with their rates and stuff, but we'll have to wait and see. I don't want to be the bearer of bad news, but I want to show these chart one more time because this puppy is flat on perfect, and you ought to pay attention to this. This is the one we got from Jim Bartolioni. It's a New York Stock Exchange weekly chart, and you'll see those two boxes that we have there, the one on the left and the one on the right. Folks, mathematically, they're as perfect as you can possibly get. After the market broke down and took out the previous week's lows, it rallied up to a 61% retracement exactly. Actually went above it by 5/100ths of 1%. And the same thing happened on the right side box where we took out the weekly low. The market rallied up the exact same Fibonacci level, and it exceeded it by 0.05 also. So this is really very interesting. And then we had the move down, and we're continuing it down. And if you'll notice the divergences that we've had here, we've even had a bigger divergence during the time the market was going higher this time than we did in 2007, which indicates that this could be even more bearish. So be careful, folks, because if we take out, it's not if, it's when we take out these lows that we made on August 24th, then you want to be extremely careful. We'll always want to be extremely careful no matter what, but especially if we do take that out. And I do believe we're going to, given the fact that the market just does not have any gusto. And the problem is that if the selling starts to increase, there's not enough shares to sell. I mean, excuse me, there's not enough buyers out there that are going to be able to take this stuff. And so we're going to be seeing if that's going to be the case. That's pretty much what we're looking at here. Anyway, this is what we're watching here in some of these things. Now, another market that is holding up relatively well compared to the other markets is the IBB. Here's another one that's setting right at the 61% retracement of the previous low that we made on November the 13th. We took that out. We took out the previous low, but we didn't go anywhere. So as long as this IBB stays above, 315, it's got a chance, for a rally, because we've been down 10 days, and we didn't come down much, but we did come down for 10 days. So we're due for a little bit of a snapback rally in that. So we'll wait and see if we have anything moving at that point. Okay, I'm starting to get a little bit of flack about the crude oil, folks. I'm just showing you like it is. I'm just looking at these patterns. I don't know diddly squat about the fundamentals. All I know is when they start feeding you yogurt and telling you it's tapioca, you got to be really careful. And that's what they're doing in the press. They're just banging us to death with the negativity in oil, and somebody's buying this stuff on the way down. The open interest is showing you that that's what's happening. We have new sellers coming into the market, but we have new buyers coming into the market in the oil market, showing by the open interest figures. And let me tell you something, it ain't the little guys that's buying down here. I can promise you that. Or I can't promise you that, but I could suggest it.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, back here. We got stocks opening a bit higher today. They were a lot higher. We got up to 2019 in the E-mini S&P. We went all the way down 20 points to make a new low from Friday at 1992, and now we're about a third of the way, well, about halfway back. And it looks like we've got a chance for a positive turn today if we do get that. We were down over 300 points in the Dow on Friday, which puts in a great deal of bearishness, but we are very, very oversold, and believe me, there's no one more bearish than me longer term. So I would be remiss to tell you that we are in a situation where we are very, very oversold. That doesn't mean we can't get more oversold, because if we close really badly today, this means that all of these patterns are breaking to the downside and they're failing. And we know that when they failed on the upside, they kept going a great deal higher. And if they fail on the downside, they can also go a whole lot lower. Okay, we're going to switch over now to the precious metals. We've got gold trading at around 1072 in the Feb gold. As you know, we were looking to be a buyer of that at the the 1050 level. So far, that's held. Last night, we completed a really nice Gartley pattern at the 1065 level, looking at the 30-minute chart. So as long as the 1065 can hold to the upside, gold has a chance. Now, almost all the other commodities are still getting banged around, especially the grains, the wheat, corn, and beans are getting smacked around a bit as expected. But here again, I think sometime after the first of the year, we're going to be able to find a spot where we could buy these without, risking an arm and a leg. But at this particular point, I just don't see the opportunity there from the long side or the short side because, we're so oversold in that it could reverse at any time, and you don't want to stand in front of that. So that's basically what I'm watching in some of these commodities. Now, the whole world, I'm absolutely sure, is watching the oil market, and we're still down today. Whether we're going to turn today or not, or tomorrow, maybe we don't turn at all. All I know is that we've hit some major spots here in the oil, and with the news the way it is, you've got to be really careful. This is the situation that you're looking at when you see articles like are in Barron's this week, where they are saying they interviewed all of the, I don't know how many they interviewed exactly, but there was not one person in the interview with Barron's that actually thought that the stocks could be down in 2016. Not one person being bearish. That's reminiscent of the pictures that we used to have in the tops of the market in 2007, where the bear was being pushed out of the boat by the bull with weights on. And we had the same thing in 2000 when the NASDAQ was right at 4,000. We had the same thing where the NASDAQ bull was taking over the world. That was within 1 week of the all-time high in the NASDAQ at that time back in March of 2000. So when you start seeing those things in the news, you want to start maybe looking the other way. That's the main thing. Stocks still look weak after this rally, but how much of a rally we're going to get, we'll just have to, just to wait and see if we're going to get that rally. So far, all we've done today is we've had a pretty good range. We were down 20 in the S&P. We rallied up to a 61% retracement up here at 2010. And since that time, we've really done very much. We're trading at pretty much 2007 right now. So it's still relatively early. But I do believe that we've got a pretty good chance for a bounce in here for the reasons that I mentioned. First of all, it's a pretty good astro date. And we had the new moon on Friday, which is enough to usually, make some type of a trend change. And then we have a couple other larger ones today from our friend Norm Winsky at Astrotrends, and if it doesn't work, he's the one we're going to blame. We're not going to blame me. We're going to blame Norm. I'm not going to take the responsibility. So anyway, that's what we're keeping an eye on so far. But this news, when you see it all on one side, whether it's stocks, gold, or whatever it is, you've got to be able to think contrarian and look at the charts and say, okay, that's what it's really telling us. Now, you can easily see that we could get oil down to 32.50 per barrel without any trouble at all. I mean, we rallied $1.20 a barrel here in the last hour, which really isn't hardly anything at all. And now we're backing off from that. So, there's no really powerful buying, coming into the oil at the time. And if the short covering does start from this level, we can get some pretty good runs. I mean, remember last year when we were down at this level, we went all the way up to, I believe we went to $1.14 from the low in 2009. We went up to $1.14 in oil from the old high at 142. So those are some of the things that you want to be looking at. Now, one of the currencies that we've been asked to talk about, and that's the British pound. We had a good rally last night, Friday actually, that took the British pound up to the exact 786 of the previous high. It was just absolutely spot on, and we've broken 100 pips from that level to get down to the 151.20 level, one more time. So this tells us that this trend that we have in the British pound is certainly headed down, because we've got lower tops and lower bottoms all across the board. The rallies that we've had from October and November and December were all equal. So this market is about harmonic as anything you could ever trade. So if you want to trade something that's relatively low risk, that handles stops pretty easily, it's that British pound versus the US dollar. Does a great job. So keep an eye on that, because it made a major top up here on Friday at the 152.24 level. The high was 152.44, I believe, and that difference is about $100. Let's see, yeah, it's about $100 in real cash money. So that's the main thing here that we want to keep an eye on. Now, there's one other one that's related to this Canadian dollar, or to the oil market too, and that's the Canadian dollar. I want to bring this up because this also is a chart from my good friend Jim Bartolioni, and we've hit that number on the Canadian dollar overnight last night up at that 138 level. We got to 137.95. And we've already broken 100 pips. Now, that has a correlation with crude oil of about 100%. I think it's about 90%, but it's something that's pretty good, pretty much spot on. So we want to watch that one also. These things they're not all fitting together yet, but all you really need is a really strong close in the oil complex today, and you'll start to see some short covering, I believe, because we're in the area of that strong seasonal that our good friend from GAN Educators, Jim Flanagan, pointed out to us, the strong seasonal that we have that is going on in the oil market. And as you can see here, I'm going to put this out again to let you know. I repeat these things because I know there's different people come in and listen at different times and stuff, but these are the ones that I think are the most important. That's why I bring it out. As you can see, there's a 33% chance that the crude oil bottoms in the month of December. Those are really good odds, because there's 12 months and 33% of those months come in, or 33% of the time it bottoms in December. You should pay attention. And when you're reaching numbers like we hit today in the heating oil at the 112 level, which was the 1.618 expansion on the weeklies, and it took out the lows from March of 2009 by 10 cents, which is a total of $40. You got to pay attention to that. Now, that doesn't mean it can't go a lot lower. It just means that we're getting close. So just keep that in mind. Now, some of the stocks that we're looking at, like ExxonMobil, that's also held up, relatively well. So these are some of the things that we want to see how things are going. Now, we backed off from that 61% retracement in the S&P really nicely. We're down to the 2,000 level, so we'll see if that's going to be the case. Now, if we start making new lows, this is going to say that we're probably going to go a whole lot lower today, and these lows today are probably not going to hold. So just always trade, be nimble, and always use a stop, as Art Cashin says. And I think you'll be okay. Okay, now we had another question about the grain markets. I mentioned before we're still going down in the grains. We had a chance in soybeans the last couple of days to hold, but we've started to fail in that. So I believe we'll probably make new lows here in beans here in the next few days. But in the early part of the year, we'll be watching for a pattern, that presents itself. If you'll remember last year, in March and May, let's try May, right around Memorial Day, we had that beautiful Gartley pattern and the very strong seasonal, and the beans rallied $1.50 from that level and hit it spot on within 3 cents, and then rallied, a great deal. So we'll get another chance like that. But right now, there's not a pattern that is setting up that actually makes sense, in my opinion, to actually do it. So that's the primary thing that I'm watching, is to see how it handles the end of the year. December is always a tough month in the markets, and that's mainly because a lot of people are taking time off. So the volume is a lot lower due to the holiday atmosphere. So you've got to factor that in when you're looking at some of these things, because these moves can certainly be accentuated by quite a bit. Someone's asked me the question, how did I come up with that number of 210? You take the high that we made in the S&P at 2019, and then you take the low at 1192. So that's a total of what, 22 points. And then if you take the 22 and you take 61% of that, that's 13. You add it back, and guess what? Bada bing, bada boom. It takes you right up to 2011, and the high was 2011 and a half, I believe. Yeah, 2011 and a quarter. So it was spot on. Now, on the way back down, if we can hold this 1195 level in the S&P, which is basically unchanged on the day, then we've got a chance, for the market to possibly, turn back up again. But the cycle day is really important today. We've seen it in Germany. We've seen it in the Hang Seng in Hong Kong, and we started to see it here also. So there'll be a lot of, moving back and forth to see if this is going to be a big cycle day or not. The bonds are down a full point from their high today, which was a 786 retracement of the high we made on Friday. So that's also leading some ideas that we are very close to the risk-on environment again. Whether that's going to happen with the Federal Reserve doing anything or not, I don't know. I wish they would just get it over with. I just get tired of hearing about it because it's pretty much a foregone conclusion. I mean, Fed fund rates have been going crazy to the downside, or rising, quite a bit, way above the levels from 2009. So the rates have already risen. The Federal Reserve just hasn't entered the party yet to tell everybody that it's okay. But that's neither here nor there. That's actually what's happening. Is rates are going higher. Okay. So right now, the next thing we want to take a look at is we'll check the oil market here. See, the NASDAQ has also had a little bit of a rally, but really not too much in that area. So we'll keep an eye on that. The gold is doing nothing. And that's about it. Okay, if we have any questions, it's 877-927-6648. And I don't know if I'm ready for a break yet. I guess I got to keep figuring out what I had. One other thing I wanted to mention to you, and that was I already did the Hang Seng. Give me 1 second, folks. I had one. Oh, I know what it was. I wanted to reinforce what we were looking at with the hold on a second here. We'll see what we got here. Okay. Someone's asked me a question. How do we find out what are the harmonic numbers in Forex and futures? You do that by doing the work yourself. Go to a 30-minute chart, Marshall, and just find the most common swing that you see on a 30-minute chart and test it. You'll see that swing will pop up several times, and then what will happen is when the market's really active, the harmonic number will increase by 1.618. In other words, if the harmonic number is 30, it'll increase to 50 in really wild markets, and that's what happens. The harmonic numbers in the S&P have not changed since we start trading on April 16th of 1982. The number is 5.5 points. And 3.5 points. Now, because we're having wild swings like that, you have to multiply it by 2 and 3 and 4 and 5. But if you did a small intraday chart, just looking at the swings, you'll see that 5.5 point swing is like a DNA of the S&P. That much I'm absolutely sure of. Just see what's going on. The Treasury bonds, I did cover them. We made a 61% retracement on the long-term dailies up there at 157. Now we've backed off a full point in the bonds. That's another reason to think that, this market we had a flight to quality by a great deal in bonds on Thursday and Friday. And so this is what we're looking at. So we're going to take a little break here, and then we'll be right back from the offices of Duke & Duke.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back. We're going to be wrapping up the show here, and I think there's no better way to do this than to watch the New York Stock Exchange Index, because keep an eye on how we close today. This is going to be very important. We have a pretty good cycle date. We've had a really wild swing. Well, not anymore. Just about a normal swing. We've had a 55-point swing in this. 35-point swing in the S&P already. 20 higher, 20 lower. That's 40. Yeah, 55-point swing. So it's been a pretty big swing so far today. But this is a key cycle date. It's not just. It has to be some related to the new moon that we had on Friday, but we're very oversold. We're down 10 days from the high we made back in on early December, around the 2nd, And so what we'll be looking for now is a nice little bounce of 3 to 5 days. And that should be the last bounce that we get for quite some time. I don't believe we're going to have a Santa Claus rally. I think Santa Claus is going to go on strike this year and not do very nicely to some of these folks. That's just my opinion. There's certainly the weather here is certainly not here in Philadelphia is certainly not reminiscent of Christmas time, but that can change in a heartbeat, as we all know. Folks, be really careful in here because this market has got a chance to melt down. It really does. And the reason I say that is because of that similarities that we showed today between 2007 and 2015, how those patterns are absolutely equal. So at any time you could come in here and see the market start to give up, and all that means is that there's just no buyers. The buyers are on strike, and the sellers, they're going to come to the door and they're going to tell their brokers to sell, and the broker's going to say to who. So you've got to be really careful in here with the liquidity that we have going on. Whether the Fed does anything or not, I don't think it's going to make a whole lot of difference because the Fed funds have already told us the rates are higher. All they're going to do is capitulate and say, yep, that's what they are. They're higher. But that's how the news is. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.